We now look at practical example 1. On 31 December 2000X, the following pre-adjustment trial balance was prepared from the accounting records of Archer Dealers. When we look at the name of the trial balance, which we call pre-adjustment trial balance, this is the same trial balance that you have prepared up until this point. In other words, it is a trial balance that includes transactions for all these accounts that took place each day during the current financial year. So these are normal day-to-day transactions. They do not include any year-end adjustments. These year-end adjustments are explained below the trial balance. The following items must still be taken into account in the preparation of the above trial balance. So these adjustments and the amounts for them are not yet included in these pre-adjustment trial balance balances. Some of these amounts will include income and expenses for another financial period, and some of these amounts do not yet include income or expenses that must be included for the current financial year. If we go and look at the right-hand side of the screen where we are now going to do the general journal, we start off on the first day of the financial year with that very first closing transfer that you learnt in chapter 4. So that is where we remove the opening inventory from the inventory account and we transfer it to cost of sales. So looking in the trial balance at the opening inventory amount, that is where you will find the amount. So I tell you, this is the trading inventory on the 1st of January, 14,000 Rand. It's on the debit side. To remove it, take it out of this account, to do the closing transfer, we need to credit the trading inventory account and we debit cost of sales. So that is your very first journal entry. Debit the cost of sales, which is a profit or loss account. It's an expense, so it's included in the statement of profit or loss. Credit trading inventory, which is an asset, so it is a statement of financial position account. And the amount is 14,000 Rand, the amount of the opening inventory given in the trial balance. Then we start with our adjustments. The first one that they give is then concerning the closing inventory. They tell you inventory amounted to 12,000 Rand on 31 December 2000X. That's the last day of the financial year. Currently, our trading inventory account has got a zero balance because we had a debit of 14. We credited the account with 14, which gives us a zero balance. But now the question tells us that inventory at the end of the year is 12,000 Rand. So we need to put that inventory amount into the trading inventory account. So we're going to debit trading inventory with a 12,000 Rand, and we are going to credit cost of sales with the 12,000 Rand. So this is also an adjustment that you already learnt in chapter 4. And remember the financial statement indicators. Then the next adjustment that you also have already learnt in chapter 6 is the depreciation one. To record depreciation, you debit depreciation and credit accumulated depreciation for each class of assets that you need to calculate depreciation for. So we have one depreciation expense account, but we have separate accumulated depreciation accounts for furniture and vehicles. If we go and have a look at the trial balance, at the income and expenses, you can see that there is no depreciation there yet. So we still need to record this depreciation. Debit then depreciation, which is an expense, so it will appear in the statement of profit or loss, and credit accumulated depreciation for furniture and for vehicles separately. And these are what we call negative assets. They appear together with the furniture and the vehicles under non-current assets, so they are statement of financial position items. They tell us that furniture is 10% on the cost price. That is the straight line method. So you need to go to the trial balance and have a look at what is my furniture's cost price. And that is where I get that 10,000 Rand times the depreciation rate that is given in the question of 10%. That gives me 1,000 Rand. And if I go and have a look at vehicles, that tell me 12% on the cost price. So this is also a straight line method. Look in your trial balance to get the cost price of vehicles, 12,500 Rand. So you take that cost price times the depreciation rate that is given to you, and then calculate the depreciation that must be written off for vehicles. And then the two added together is what is debited against the expense account. The next one is number 3. Rent was received for the 13-month period ending 31 January 2000 and Y. So this tells us then that the rent was received for 13 months. So we go and have a look at our rental income account, which is 3,900 Rand. So we debited bank, we received the cash, and we credited the income. But that 3,900 Rand is 30 months rent. And as you know, there are only 12 months in a financial year. So that 13th month must be taken out of that income account because it belongs to the next financial year, because it is for the period ending 31 January. So January's rent has already been received. We debited bank, credited rental income, but it does not belong to this year's income. We've got to reduce this year's income amount so that it only reflects 12 months rent. In order to calculate that, we take the 3,900 Rand divided by 13, which gives us 300 Rand per month. So we then reduce our income account with that 300 Rand, and we go and take it to a rent received in advance account. So in order to know what you call this new account, you must go and ask yourself, what is this all about? It's about rent received. What happened with this rent? It was received in advance. So you need to reduce your income account by debiting it, and remember to say that it's a statement of profit or loss item, and then you go and credit rent received in advance, and this new account that you create is always a statement of financial position item, and we go and credit that account with 300 Rand. So I've reduced my income with 300. I had a credit balance of 3,900. I debited the account with 300 Rand, which now means that my balance in my rental income account is 3,600 Rand, and that reflects the current year's 12 months rent received. That extra 300 Rand I've put away into a separate account because that belongs to next year's income. Then number 4, salaries and wages of 500 Rand were outstanding for December. Remember when your financial year is January to December 2000X. Now tells you you haven't yet paid salaries for December of 500 Rand. So in your salaries and wages account in the trial balance, there's 5,500 Rand. So this point is telling you that there's 500 Rand short in the account. It should be 6,000 Rand because December falls within the current financial year. So the employee's salary was not paid to them for December. It is owing. The employee worked for December. It was incurred during December by the business. So we need to add the 500 Rand to that 5,500 Rand. Now, how do you make a debit amount more? You go and debit that account. So we need to increase our expense, which comes in the statement of profit or loss. We need to increase our expense by debiting it with 500 Rand. And then we need to go and credit an account. And what is it about the salaries and wages? It is accrued. Accrued means it is still owing. So we call it salaries and wages accrued. And then this other account that you create is always a statement of financial position item. And because you credit this account, it will fall under current liabilities in the statement of financial position. And we go and credit that account with 500 Rand. So if you go and check your salaries and wages balance, it was 5,500 Rand. You've increased it by 500 Rand. It is now the 6,000 Rand, which is the total expense for the current year. The next one then is number 5. An overpayment of 50 Rand was made in respect of water and electricity. If we go and look at the water and electricity expense item in the trial balance, we see that water and electricity is 500 Rand. And this point is telling us that we paid 50 Rand too much. So this amount should actually be 450 Rand. Therefore, that 50 Rand was actually, because even if it was overpaid, you assume then that it was paid in respect of January's water and electricity. In January, falls within the next financial year. In order to decrease this debit amount, we need to go and credit the water and electricity expense. Remember, it goes into the statement of profit or loss. And then what happened with this water and electricity? Yes, it was overpaid, but what do we call it? It's an expense paid in advance. So we call it water and electricity paid in advance, and that will then be a statement of a financial position item, and because we are debiting the account, it will be a current asset. So this was 50 rands worth of water and electricity that was paid too much, and therefore you are going to allocate it to the next financial year's expense. The next one, commission income amounts to 45 rand per month. So now we need to go and look at, but what is our commission income amount in the trial balance? It is 500 rand. So that is what is currently being recorded. So we need to calculate 45 times 12 gives us 540 rand. That 500 rand should actually be 540 rand. So our income is too little. The person for whom we rendered the service has not yet paid us that 40 rand. We earned the income because they tell us it's 45 rand per month. There are 12 months in the current year. Our income should be 540 rand, but it is only 500 rand. We need to go and increase our commission income by crediting it. It's a statement of profit or loss item. And then we need to show that somebody owes us that money. And we just call it what happened with this commission income. It is owing to us. So we need to still receive it. So you call it commission receivable. And it is a statement of financial position item. Because it is being debited, it will fall under current assets. The next one is point 7. Credit losses of 100 rand must still be written off. So now we need to go and write off credit losses. This is a customer who was unable to pay the business. His debt is included in that 2,900 rand for debtors control. He came to the business and he said, I cannot pay you, I owe you 100 rand. And then you as business owner decide to write it off. So the writing off of credit losses, you must first go and check, is there an allowance of credit losses available? And if there is, you use that. This is chapter 7 work. So we use that allowance that is available by debiting the account allowance for credit losses with 100 rand that must still be written off. And we go and reduce what the debtor owes us. So we credit debtors control. Use the allowance that is available. Reduce what the debtor owes you. So debit allowance, credit debtors control. So that is how you write off credit losses when there is an allowance available. And then the last point is the allowance for credit losses must be adjusted to 5% of outstanding debtors at year end. What you need to do is calculate what is my outstanding debtors, because I had a journal entry that affected my debtors control. Then you must calculate 5% of that amount. Then you must go and check what is my allowance for credit losses currently, because once again, you had that previous journal entry that affects your balance of your allowance for credit losses. And then you go and compare what your balance is currently with what it should be, 5% of outstanding debtors. We first do those calculations. So let's go and calculate what should the allowance be. In other words, what is 5% of outstanding debtors? Outstanding debtors, we started off with 2,900 rand according to the trial balance. That is what my debtors control said in the trial balance. But then in the previous journal entry, I wrote off that 100 rand saying, okay, don't worry, you can't pay me. I'll write off your debt. So you take it out of debtors control. So my outstanding debtors is 2,800 rand. 5% of that gives me 140 rand. That is what my allowance should be. Now I must go and calculate what is my allowance. So once again, I'll go and look at my trial balance. My allowance started off with 200 rand, but then I used 100 rand in the previous journal entry of that 200 rand. So I've got 100 rand left. So my allowance is currently 100 Rand. It should be 140 Rand. So I need to increase the allowance by 40 Rand. To increase the allowance, you must credit the allowance with the 40 Rand, and then your corresponding debit entry is then to debit credit losses, which is the expense which appears in the statement of profit or loss with the 40 Rand. So that is how you increase an allowance. Debit the expense and credit the allowance for credit losses. And by doing all these journal entries, we have then answered what the question required, which is to journalize the adjustments for the financial year ending 31 December 2000 and X.